At this point, you and everybody and their dog knows that the Bank of Canada decreased interest rates twice. That's a quarter point each time in both June and July of 2024. And this starts to beg the question, what's about to happen with interest rates throughout the rest of 2024 and into 2025 as we enter into one of the most important times in Canadian mortgages? Now, if you don't recall, in 2025 and then even into 2026, there are over 2.2 million Canadian mortgages coming up for renewal. And so this is a big time for mortgage renewals, and make no doubt about it, it will have an impact on where interest rates are in the marketplace by the time that most people are coming up for renewal. Hey guys, I'm Alex McFadyen here with Flow Mortgage Co. Here to talk to you a little bit more about where rates are potentially going to go. Now, if you didn't already pay attention to it, BMO's Doug Porter recently came out and said that this year in 2024 might actually be the most challenging year in real estate, specifically as it comes to interest rates and as it comes to where rates are going forward. He even mentioned that it might even be the worst year or hardest year as it comes down to actual real estate itself in terms of pricing, notwithstanding all the completions that have come up and the condos in the GTA and all the other issues throughout the country. Typically speaking, most rate cycles themselves take about 12 to 18 months to work their way through. And well, wouldn't you know it, June, July were about 12 months after the highest part of the rate cycle in Canada at that 5% range. Now, with rates starting to have come back down a quarter point and a quarter point, it starts to beg the question, where does the future put us and where are interest rates going to go? And better believe a lot of different people have a lot of different opinions, but I'm not here to bring an opinion to you today. I'm just going to share with you some of the facts about where the market actually foresees the market. So looking at some of the actual forecasts for the remainder of 2024, updated most recently in the summer of 2024, here are the projections from the big five banks. At BMO, they suggest the Q4 policy rate to be a 4.25% to end the year. CIBC, 4%, followed along with NBC, National Bank, RBC, and Scotiabank, all suggesting that we're going to see at least 2 more rate cuts before the year ends, which could represent a 1% rate decline from June to January of 2024 to 2025, which is a significant difference. Make no bones about it. That will have a huge impact on Canadians who are coming up for renewal, and more importantly, Canadians who currently are carrying variable rates who aren't even making payments to their principal. Now, the only other outlier would be TD, which actually suggested that they were going to see a 4.25%, but I have seen reports recently to suggest that they've actually flip-flopped, and TD now is hanging out around the other banks, suggesting 2 more rate cuts throughout the year 2024. Now, this is massive information and something, again, that can't be understated, because the reality about interest rates is that while they're not everything, they definitely have a pretty big impact on people's livelihood. And of course, one of the unique things about this potential rate cycle when compared to a cycle like the 80s is how indebted Canadians are, and even more so Americans. And the importance of rate cuts and rate increases is magnified even more than back then, because in Canada, for every $1.65 of income, we owe $1 of debt. So no doubt these rate decreases are going to have a notable impact on not just the future of mortgages, but also real estate as a whole in our country. Now, the question mark many are still asking is, are we going to see a rate hike in 2024? Well, I mean, honestly, anything could happen. There have been a lot of strange things that have happened in the last 5 years alone, which I'm not going to name at this point right now. So anything is possible, but the likelihood as far as the projections given the forward markets is put at virtually nil at this time right now, which is in the summer of 24, for the Bank of Canada to actually increase rates. And in fact, the most recent suggestions are the decreases which we're talking about. So looking at the predictions for 2024, as we mentioned, Doug Porter recently came out and suggested at the beginning of the year, he saw rate cuts happening 2 more times this year. And he suggested the next rate cut could happen in September, as long as core CPI is only plus 0.2% month over month or lower. His prediction places the 4% by the end of the year. Scotiabank suggests also a 50-point decrease by the end of the year, with others suggesting something similar. It seems that the vast majority of those who are looking at the monetary policy right now are suggesting a September decrease, followed by a December decrease at the end of the year for the next one, meaning that many are suggesting October they skip over the actual rate decrease at that time. Now, looking into longer term rate forecasts is always a challenge. There's so many things that impact. I mean, think about it. The start of 2024 to the middle of 2024, there have been a lot of revisions in terms of when and how the rates were going to come down. But right now, the long-term rate forecast is out as far as 12 to 18 months. And many are suggesting that the central bank is about to see rates decrease by as much as 1.75%, which would take the overnight rate all the way down to 2.75%, nowhere near the rock bottom quarter point that we saw during COVID. But then again, during COVID was such a unique time and it was never likely to ever happen again. Let's be honest. Now, is that going to fuel the fire for real estate economies across the country in different markets? Possibly. We might see it in certain markets. And let's be honest, there are some markets that despite higher rates absolutely make zero sense right now. With house prices continuing to remain elevated in markets like Alberta and many other small markets, the reality is lower rates could continue to fuel the fire in those different economies, especially with house prices being low. A lot of this will depend on the building and the infrastructure in these cities. What's likely to happen is it's going to start to normalize the marketplace. The question mark is, will we continue to see the high amount of supply in the markets that we have seen in the first half and the second quarter of 2024? This will have a big impact on house prices, notwithstanding condos and things of that nature. And some economists are even going out and suggesting that this could still have been and will be the best time in terms of value to purchase real estate, depending on what happens on the outset. I wouldn't disagree, because there's a lot of people anecdotally that I'm speaking to on a regular basis that are suggesting they're waiting for rates to come down at least another 50 points before they jump back in the water. Not sure what the magic is between the 50 points, but that's been the survey and the conversation that I've seen, as well as the outset. So again, what happens as far as rates are concerned? Well, remember, we have September, October, and December for 3 more rate decisions that will come into place, and they'll be looking at a variety of different parameters, as they already are looking forward. I think the biggest thing that realistically we should be looking out for is the employment and what's happening there. We've already seen unemployment increase and employment itself go down. Part-time jobs are up, and I'm seeing it day to day in what I'm doing right now with people being laid off and or not getting the raises that they were a few years ago. So does that start to work its way into the economy and have an impact on rates? I would think so, but it's obviously something that we're going to see what happens. So the question mark is really back to how far out can we look and what's reasonable? For anybody to suggest that they know what's going to happen, next month, let alone the next 12 to 18 months, is a very unlikely occurrence that anybody ever knows. I mean, economists are paid to guess the future, but there is some rationale to suggest that rates are going to come back down, and it wouldn't be surprising to suggest that we come back down to the neutral rate. So I think that most potential current variable rate holders or potential mortgage holders can rejoice knowing that interest rates are going to come back down to a normalized level, likely in the low 4% range of the future looking forward. The next question is always, so how do I pick my mortgage product? I think if you're someone that's betting on the future and you believe in where the market's going right now, which the stats don't lie, then you should probably consider the possibility of a floating variable rate where your payments actually decline in the marketplace. If you're someone who likes that certainty, you can snag some pretty good value on fixed rates right now, which have come down at least 1% in the better part of the next 12 months. But at the end of the day, making a decision on your mortgage isn't based on what is going to happen. It's based on where you are right now and your personal financial situation. But I'd like to know, what do you think the rates are going to do in the next couple months? Are they going to go down, up? I'd love to see your comments in the notes below. Give me your feedback. We'll see you on the next one.